minus present value of storage cost here. So spot rate plus present value of storage cost. Rest of the things will be same as the computation in the case of dividend. When dividend is receivable, the spot rate minus present value of dividend, but in the case of storage cost, spot rate plus present value of storage cost. How to find the present value of storage cost? Storage cost divided by e to the power of RT. So it will be storage cost divided by e to the power of RT. Question number 8 is based on this one, illustration 8. Now illustration 8 has two cases. When storage cost is given in amount and when storage cost is given in percentage. So when storage cost is given in percentage, in the case of granules, we can add this storage cost to the R, value of R, and rest of the things will remain same. So how to find this one? Simply we have to add this one, find this theoretical price with simple value spot into e to the power of RT. We are talking about the storage cost, computation of theoretical price when storage cost is given. It can be computed with the help of this formula. But when storage cost is given as percentage, we don't need to find this step, present value of storage cost. We will skip this one. Simply add the storage cost rate to to this R value. We have to add storage cost to this R, and theoretical price will be spot rate into e to the power of RT. So here, like in this case, theoretical price spot into e to the power of R. R is 12% and 4% is storage cost. We have added the storage cost to this one, and rest of the things will remain same. But when storage cost is given in amount, in that case, we will find the present value of storage cost. Then we will add to the spot rate and then we will multiply with e to the power of RT. This will be the difference when it is given in percentage and when it is given as a value. Next very important topic in this chapter, that is decision making with theoretical price. Decision making after the computation of theoretical price. Illustration 9 and lot of illustrations are there. Illustration 5, 6, that is also based on this one. So decision making case 1, when actual future price or forward price is less than theoretical price. Step 1, question will be asked to find the theoretical price, then take the decision. So first we will find the theoretical price after identifying the case, whether storage cost is given or dividend is given or dividend is not given. Now after the computation of theoretical price, we have to make the decision. So case 1, when theoretical price is less than actual future price. When theoretical price is less than actual future price, then buy in future and sell in spot market. This we can remember this one as same case in the case of CAPM. When CAPM, the keyword I have told you UB, you can remember UB, that is undervalued by the security. Undervalued when CAPM is less. When CAPM is lesser than the actual value, so in that case it is undervalued, we have to buy. Here also, when actual future price is less than theoretical price, we can buy in future market. It means what? When actual future price is low, it means it is undervalued. The asset is undervalued because actually it is when the contract is available at lower price. So better to buy in future market because the future value is lower. वो असेट आपको फ्यूचर मार्केट में सस्ते पे मिल रहा है, कम पे मिल रहा है, तो बाइंग डिसीजन आपके लिए बेटर है. बिकॉज अगर आप फ्यूचर कॉन्ट्रैक्ट बनाते हैं टू बाय दैट असेट आफ्टर 3 months एंड प्राइस इज लोअर, सो इट इज बेटर टू बाय. So actual future price asset is available at lower price what it should be. Theoretical price is fair price, but it is available at the lower price. So better to buy the asset in future market. Now we can sell that in spot market. If we need cash, we can sell that one in spot market. So sell in spot and buy in future. We can remember only one thing, what decision will be taken in the future market, and opposite will be the spot market decision. So remember this one as actual future price less. It means it is available at lower price, buy in future market. Opposite situation, when actual future price is more than the theoretical price, sell in future market. Actual future price is more, the price is more than the fair value, then it is better to sell in future contract. So we will sell in future market and buy in spot market. Illustration 4 is based on this one. So while revising this concept, practice illustration 4. However, illustration 9 is also based on this one. Illustration 5 also carries this point. But this topic starts at illustration 4. This is about the basic concept of forward and future. Now next one, future agreement, future contract. So difference between forward and future. Future contract is traded with the help of exchange, that is regulated by exchange. Margin account is required to be deposited by both parties. Both buyer and seller will deposit margin. Now what are the types of margin? And types of future: stock future, index future, commodity. We can trade for the commodity, currency and interest rate. Now what are the types of margin? Initial margin, that is minimum amount to be deposited by buyer and seller at the time of entering into the contract. It is generally 10% of the total future value. Now maintenance margin. Maintenance margin is minimum amount that should be always present in the margin account. So it is generally 75 to 80% of initial margin, or we can say 7.5 to 8% of total contract price. Now variation margin, that is the additional money to be brought by both parties, that is variation margin. Mark to market, that is very important feature of future market. Mark to market. What is mark to market? Method for recording the value of asset according to the current market price. In the objective question, since this time most of the question will be based on objective, so a closing price that can be asked, what will be the closing price of, suppose this is the question, so question will say what will be the closing balance of RAM at the end of day 1. So this final value will be asked to find. So in the case of this one, mark to market, long position, we will identify who is buyer and who is seller. The first step, identify the buyer and seller. Then start with the opening balance, zero is no balance. Initial margin, this is the example given at page 352. So practice the example 352 for mark to market. Same question in workbook also. Not exactly the same value, same type of question is in workbook to find out the closing balance. So we will start with the initial margin. When price declines, suppose the future price was 1000, price declined. So in the case of price decline, buyer of this one, because the buyer of this one has the loss, buyer has to buy at 1000 but the market price is 980, so buyer will have the loss. This loss 20 for 1, that is 20 for 1 share, one security, there were 100 securities in this question. So 2000 loss will be deducted from his account and it will be added to the seller's account. First we have to compute, we have to find the value, what will be the action taken for the buyer, for the buyer's perspective. If it is loss for the buyer, it will be gain for the seller. So it will be added here, it will be deducted here. Now next day balance will go with this one and price will be 980. For the next day trading, price will be 980, not the initial price 1000. So this is mark to market. Now contango and backwardation market. What is contango market? Contango market is when future price is more than the spot price. Means when future price is increasing. That is when future price is more than spot price, market is known as contango market. And when future price, that is future price is lesser than the spot price, market will be said to be in backwardation or inverted market. Difference between this spot and future price is known as basis points. Arbitraging, another important topic in this chapter. Arbitraging. Arbitraging, question number 9. So question 9 says, first find critical price, then find the arbitrage profit. So what will be the arbitrage profit? That is future price minus theoretical price. That is future, first we have to find the theoretical price. Future price will be given. So profit on arbitrage, difference between these two. If there is no difference between theoretical price and future price, arbitraging will not be done. Illustration, that's why the question of arbitraging will say to find the theoretical price first, then find the arbitrage profit if any. So arbitrage profit will be difference between these two. So far in this chapter, basic concept regarding the basic concept of forward and future. Computation of theoretical price in 3 cases. Dividend, storage cost will be added, dividend will be deducted. Then decision making, theoretical price, decision making with the help of theoretical price. Make the very short note at home. Suppose in one page just summarize all the topics. आप एक पेज में समराइज कर लेंगे इसे, आपको एग्जाम टाइम में क्विक करेंगे. जस्ट that what are the topics given in this chapter? That is theoretical price, first topic, 3 cases, make the chart. That 3 cases, one is computation of theoretical price when storage cost, no dividend, and write the formula there. Second topic will be decision making. So when actual future price is greater, when actual future price is lesser. When actual future price is greater, we have to sell in future, and lesser buy in, that is buy in future market. Coming to the next topic will be future. So types of margin. Mark to market, what is mark to market? And in this case, future arbitraging. Question will be based on arbitraging, that is profit and arbitrage. Question number 9 has also been asked in exam once. So computation of arbitrage profit. Till this point, question this one, arbitraging. After this, hedging, then swap. So next one, hedging and swap. Hedging will be in last. Hedging with futures. Now in the case of hedging, we have to study 3 cases. First, hedging while having a stock in portfolio. Second, hedging to modify systematic risk, and cross hedge. So question number 10 is for cross hedge. First is hedging while having stock in portfolio. Now why future is most common derivative used to hedge? That is due to price discovery and liquidity feature. Price discovery due to mark to market feature of futures. Now first one, case 1, hedging while having stock in portfolio. In this case, the investor will already have the portfolio. Investor has already invested. Now hedging, investor will take opposite position. In the case of hedging, we take the opposite position. Step 1, question can be based on this one. Find the number of future contract required to hedge the portfolio. Find the number of future contract. So how to find the number of future contract? Question number 16. Number of future contract hedge ratio multiplied by value of portfolio to be hedged divided by value of one future contract. Hedge ratio, if beta is given, if hedge ratio is not given, beta is given, beta will be taken as hedge ratio. Otherwise, the formula of hedge ratio is standard deviation of change in spot price divided by standard deviation of change in future price multiplied with correlation. But generally beta is given. In this chapter, hedge ratio is not being asked to find. So when beta is given, we have to take beta. Sometimes beta, two values of beta of asset and beta of portfolio is also given. So when two betas are given, hedge ratio will be portfolio beta to asset beta. Portfolio beta will be in numerator. So hedge ratio portfolio beta divided by asset beta. So one question, find the number of future contract to hedge the portfolio. Portfolio is already being created by the investor and we have to hedge this portfolio. So it is value of portfolio to be hedged divided by value of one future contract. Now second question, that is hedge to modify systematic risk. Hedging to modify systematic risk. So how to either beta will be increased or decreased. Modify means what? To change the systematic risk. So beta can be increased or beta can be decreased. So when beta can be increased or decreased, that is how to find this number of future contract, original portfolio value into original beta minus desired beta. It means here the beta is decreased. When beta is decreased, future contract, value of future contract sold. How can be beta decreased? We can sell the value of asset. We can sell some of the assets to decrease the beta. So beta contracts and the value of future contract is sold here to decrease the value of beta. So to decrease the beta, this formula will be used. In the case of decreasing the beta, the question will be asked, find the amount of future contract sold. So it can be computed original portfolio value into original beta minus desired beta. Because here the desired beta is lesser than original beta. If beta is higher than the original beta, desired beta will be used here. That is difference between desired beta minus original beta. That is future contracts bought. Simply we can remember with the help of this formula itself. What is the number of future contract to decrease the beta? Suppose the question says, what is the number of future contract required to decrease the beta? Rest of this portion will remain same. Only here in the case of beta, we have to take this one. That is, if the question says to sold, then original beta minus desired beta. When it is bought, case of bought, that is desired beta minus original beta. तो आप एक फॉर्मूला याद करेंगे, ये फॉर्मूला नंबर ऑफ फ्यूचर कॉन्ट्रैक्ट बीटा इनटू वैल्यू ऑफ पोर्टफोलियो हेज्ड डिवाइडेड बाय वैल्यू ऑफ वन फ्यूचर कॉन्ट्रैक्ट. और अगर क्वेश्चन आपका सिस्टमैटिक रिस्क दैट इज बीटा कम या ज्यादा करने का होगा तो आप बीटा की जगह यहाँ यूज करेंगे. अगर कम कर रहे हैं तो आपका डिजायर्ड बीटा क्या होगा? कम होगा. तो आप ये यूज करेंगे ओरिजिनल बीटा माइनस डिजायर्ड बीटा. अगर बीटा इंक्रीज है तो डिजायर्ड बीटा माइनस ओरिजिनल बीटा, और ये यूज होगा इस फॉर्मूला में, दैट इज इंस्टेड ऑफ बीटा. So this will be the difference. Now cross hedge, that is when that asset is not available to be hedged in future market. In that case, cross hedge is used. So question number 10, it has been asked, question number 10. Practice this question number 10. But in the case of hedging, very important topic, in the case of hedging, question is not based on this one. These question are for objective question जो आपका जून 2019 जून 2018 मोस्ट ऑफ द टाइम वन क्वेश्चन दैट इज एक क्वेश्चन आपको बताया था वो क्वेश्चन आप करेंगे दैट क्वेश्चन इज बीइंग आस्क्ड सो मेनी टाइम्स तो प्रैक्टिस दैट क्वेश्चन जब रेगुलर क्लासेस में हमने करा था एक क्वेश्चन करा था जून 2018 that is long effective price computation of effective price so do that part question full fledged तो नहीं होगा उसमें आधा क्वेश्चन हो सकता है तो उस क्वेश्चन को आप जरूर प्रैक्टिस करें while when you practice hedging topic next one is swap after hedging let us revise swap now again swap two steps we are done that is swap first step find the share of both parties in the swap deal that is share of swap buyer and swap dealer. Case 1 will be when banker charge is given. Case 1 when banker charge is given. The question related to swap. In the case of swap, question is generally asked to find the effective rate of interest in swap deal. What will be the effective rate of interest in swap deal? So we have to find this value. This is the effective rate in the case of swap deal. So two types of question I have seen here. That is computation of effective rate, sometimes banker commission and the diagram. These three questions are being asked. So banker commission, diagram, and now in this objective question online paper, diagram will not be asked. We don't have to draw the diagram. So it can be the effective rate, computation of effective rate or banker charge. So case 1 when banker charge is already given in the question. Banker charge we don't have to compute. This is given in the question. Question will be asked to find the effective rate. So how to find the effective rate? Step 1, find the share of both parties in swap deal. What will be the share of both parties in swap deal? Step 1, find the difference in fixed rate. Step 2, find the difference in floating rate. But beware of the negative value. आपको इसमें एक ट्रिक बताया था फिक्स्ड रेट जिसमें से जिसका वैल्यू आप डिडक्ट करेंगे फ्लोटिंग भी उसी में से उसका वैल्यू ही डिडक्ट करेंगे आप चेंज नहीं करेंगे इसे फिक्स्ड सपोज 13 माइनस 12 किया है तो फ्लोटिंग आपका लेबर +1% दूसरे का बेशक लेबर +2% हो तो आपको वैसे ही लेना है लेबर +1 माइनस लेबर +2% माइनस में फिगर आएगा sometimes in some questions I have seen this case also so don't ignore the negative sign find the difference in fixed rate आपको याद आ गया होगा ये पॉइंट क्या था फिक्स्ड रेट एंड फ्लोटिंग रेट तो जिसमें से फिक्स्ड रेट जिसमें से घटाया था उसी में से आप फ्लोटिंग भी डिडक्ट करेंगे स्टेप 1 फाइंड द डिफरेंस इन फिक्स्ड रेट देन डिफरेंस इन फ्लोटिंग रेट देन डिफरेंस बिटवीन दीज टू और ये माइनस होगा तो ये डिफरेंस ना आके ये प्लस हो जाएगा आई होप आपको ये पॉइंट याद आ गया होगा difference in fixed, difference in floating, difference in above two differences, then deduct the banker commission. That will be the amount shared by both parties. Then divide this one in the given ratio, 50-50 or 60-40, whatever given in the question. This will be the amount shared by both parties, that is share of both parties in the swap deal. Banker charge is already given here. Illustration 44 is based on this one, that is fixed, floating, fixed minus floating, deduct banker commission, then amount left after paying banker, this is divided among these two parties. Second step, find the effective rate of swap deal. Now here we have to identify the receiver and payer, that is buyer or seller of the swap deal. Who is the buyer of swap deal? Who has benefit in fixed rate from the market, जिसको market से fixed rate लोन सस्ते पे मिलता है, that will be the buyer. So अब जैसे इस क्वेश्चन में 12% जिसका होगा वो buyer होगा, that party will be the buyer. So buyer, identify buyer and payer. For the buyer we have to deduct. Buyer के केस में we have to deduct. First step, find the difference in fixed and floating. Then fixed minus floating. Step 1, fixed minus floating. Then deduct fixed minus this step 1, fixed minus floating. Ultimately this one will be the floating rate. Now deduct his share of gain. In short we can say floating minus gain. That will be the effective rate for buyer, floating rate minus gain. For the payer, add 4 things. What are the 4 things? That is this difference fixed minus floating of receiver, that is fixed minus floating rate of receiver, this party, plus payment of floating rate in open market, that is own floating rate of payer, then a share of receiver gain in swap deal, share of this one in swap deal, and banker commission. So 4 things here we will add. What are the 4 things? Difference between fixed and floating rate of receiver, floating rate of self, that is for payer, then share of receiver's gain in swap deal, then banker commission. These 4 things will be added to find the effective rate. In this case we have added this one to find the effective rate. Now when banker charge is not given, all the steps will be same except this one, banker charge is not given. In that case we have to identify the gain of both parties. That is, first deduct the share of gain of both parties. We will deduct, that is, this step will be avoided here. Find the difference between two and then find the what is the profit being shared by both parties, deduct this profit, and then the left out portion will be the banker commission. So question number 48 is for computation of banker commission, banker charge, and same question June 2017 and 18, that is swap deal. This question, illustration 48, 2017 and 2018, question number 44, this is in December 2017. Question number that is 49, that is for currency swap. So currency swap, try to solve this one based on this concept. आप एक concept याद करें उसी पे try to solve this one also. Now here the question arises, how to identify which one will be taken, which currency will be taken as fixed rate and which one will be taken as floating rate. So the lower interest rate, the currency with lower interest rate, take that one as fixed. In question number 49, yen has lower interest rate, take that one as fixed and dollar as floating, and rest of the computation make in same way as 44. That one was for the swap deal. Now forward rate agreement, that is interest rate derivative. Forward rate agreement we have read to lock the rate of interest payable or receivable in future date. That is rate of interest is locked here that might be payable or receivable in future date. So there are two parties in FRA, buyer, that is known as taker of FRA, seller of FRA. The party who pays the fixed interest rate is buyer and party who pays the floating is seller. Question number 46, 47 and 45, 45 not 46, 47, that these two questions, three questions are there for FRA. FRA terms are there 3 multiply 6 or 1 multiply 4. What is the meaning of 3 multiply 6? The difference 6 minus 3, that will be the duration. Here 4 minus 1, that is 3 months. That will be the duration of FRA. And it will start the first month, it means 3. The loan will be starting at 3 months and will go for next 3 months. So first this 3 will be starting date, means loan will be starting in 3 months. So this is the starting date. Here 1 is the starting date and difference between these two is duration of loan, that is duration of FRA. FRA are cash settled. At the end, cash is being settled, paid or received. Now two rates are in this case floating rate or reference rate. That is formula is this one. What is the payment amount of final settlement? In FRA we have to, however question has not so far from this one. But what is the final settlement? In FRA it is cash settled. What will be the final settlement? N, but N is principal amount multiplied RR minus FR. RR is reference rate or FRA rate. It is floating rate. FR will be the forward rate or fixed rate. DTM, time period of FRA. DY is total number of days in year, divided by 1 plus RR into DTM upon DY. Now in this case, the question will be asked to who will pay to whom. If reference rate is greater than FRA, seller will pay to buyer. If RR is greater than FRA, that is floating rate is higher than fixed rate, seller will pay to the buyer. Opposite will be buyer will pay to the seller. So this one was FRA in short. Now option contract either to buy or sell. Here buyer has the right to what? Either buy or sell the asset. If the contract is to buy the asset, call option. If the contract is to sell the asset, what it will be? Buyer has right to buy the asset, that is call option. Sell contract to sell the asset, that is put option. Seller will have to buy the asset. Now in money and out money. Lot of short questions based on in money, computation of in money, out money situation. Questions are there based on in money and out money situation. Based on this one. When CMP is greater than EP, that is CMP is what? Current market price. That is market price is greater than EP, exercise price. What will be the action taken by the call option? That is call option buyer. करंट मार्केट में महंगा मिल रहा है सामान एंड कॉल ऑप्शन के थ्रू वो कम पे मिलेगा. ऑप्शन बायर विल एक्सरसाइज दिस वन. ऑप्शन बायर विल बाय द असेट फ्रॉम द कॉल ऑप्शन कॉन्ट्रैक्ट. सो ऑप्शन कॉन्ट्रैक्ट विल बी एक्सरसाइज्ड बाय द ऑप्शन बायर. दिस इज इन मनी सिचुएशन. Opposite will be for the out, this one for the put option. When CMP is equal to EP in difference point or at the money situation. When CMP is lesser than EP, contract will be lapsed, that is out of money. So questions are based on this one. Find out what will be the position or what is the action taken by the option buyer. After this one, intrinsic value, we have to computation of intrinsic value of option contract. That is for call option. questions are 22, 23, 24, 25 and 26. That is computation of intrinsic value. What is intrinsic value? That is higher of 0 or CMP minus CP. That is difference between these two is intrinsic value. So higher of 0, if it is in minus, that will be taken as 0, because if it is in negative, तो आपका वो contract lapse हो जाएगा. So negative point is not taken, negative is not taken, either 0 or difference between plus value, that is CMP minus EP. For the put option, opposite will be this one, EP minus CMP, because when EP is greater, that is the in money situation. So intrinsic value will be EP minus CMP. For call money, when CMP is high, call option, when CMP is higher, that is in money situation. So it will be CMP minus EP. That will be the intrinsic value. Now time value. Time value of option premium minus intrinsic value. Option premium is amount paid by buyer to seller to buy the right. Now next topic in option, that is computation of upper and lower limit. So upper and lower limit for call option, upper and lower limit for put option. So what is the upper limit for call option? Current market price. Upper limit for call option, that is current market price. Call option के लिए आपका in money situation कब होगा? जब CMP is greater than EP. So intrinsic value is difference between CMP minus CP. And what is the upper limit? That is CMP. Upper limit for call option, that will be CMP. Lower limit of call option, CMP minus present value of strike price. Strike price, that is CMP, talking about the present value. So for the strike price also we will take the present value. So lower limit is just like the intrinsic value. Intrinsic value में भी हमने पढ़ा CMP minus CP. But lower limit, here only present value of strike price we will take. That is lower limit of call option. Put option, it will be opposite. Upper limit of put option, exercise price, because for the put option, when EP is greater, this is in money situation, and intrinsic value is EP minus CMP, and put option lower limit will be based on this one itself. So for upper limit EP, lower limit will be EP minus CMP, that is present value of strike price minus CMP, that is lower limit. तो कॉपी में आप एक जगह ये सारे पॉइंट्स कॉलम बना के आप लिख लेंगे, कंफ्यूजन नहीं होगा, याद रहेगा आपको. इट विल बी इजी टू मेमोराइज दिस वन. नाउ आर्बिट्रेजिंग इन द केस ऑफ ऑप्शन कॉन्ट्रैक्ट, that is based on question number 21 part B. Arbitraging. If option is available below the lower limit, if option contract is available below the lower limit, that arbitraging will be done. Now arbitraging cash inflow minus cash outflow. In this case, cash inflow and outflow, cash inflow 200 is the selling price, that is because it is put option. So this is the selling price 200, cash outflow, that is 190 plus interest is also given. 190 loan is taken to buy the contract, 190, and loan amount interest is 5. And how 190 आप question 21 जब solve करेंगे, 190 this is the price, spot price, plus 5 is the premium. So total amount required to buy this one is 190, that is spot rate plus premium, and we have to find interest payable on this one, that is the future value. 190 का आप direct future find the future value or find the interest and find the value along with interest. This is cash outflow and this is cash inflow. Arbitrage will be outflow minus inflow, that is 200 minus this one, difference between 194.81. So arbitraging in option contract, computation of this one, call option, put option situation, in money and out money situation, then intrinsic value, then upper limit, lower limit, then arbitraging, then graph. Graph, we have to start for call option. There will be outflow of premium value. So graph will start from the this point. जितना premium होगा आप y axis पे माइनस में वहां से स्टार्ट होगा. It will go till this point. ये जहां तक आपका स्ट्राइक प्राइस है वहां तक आप जाएंगे. फिर स्ट्राइक प्राइस में प्रीमियम वैल्यू ऐड करेंगे. देन इट विल आफ्टर दिस प्रीमियम इसमें 15 है. So 120 is strike price, 15 is the premium. After 135 there will be profit. So graph this time not relevant because in the online exam graph आपको draw करने के लिए नहीं होगा. Now option pricing model. However, for the option pricing model, delta method has been asked. But there are 5 methods. Under binomial method, 3 method, formula, delta and binomial. I will not go through all the methods because आपके लिए काफी लंबा होगा ये revision. Binomial method, formula, delta and binomial tree, risk neutral, Black and Scholes model. For delta method के questions हैं. In the case of binomial method, answer will be same from both formula and delta method. But choice is on you how to solve either by formula or delta, unless and until question says find out with specific formula. You prefer to use delta method because this one is easier. I have summarized this one all. Delta method. Delta method first step 1, find the value of delta. Then find the value of call option, that is option delta. इसमें आपको रिवीजन के लिए मैंने लिख दिया है स्लाइड्स में. What is the value? So call option delta into CMP minus FP1 into e to the power of RT minus RT. Now what is FP1? Lower future spot price. This one is put call parity, that is put option plus spot price is equal to call option plus EP into e to the power of minus RT. Formula method, this formula will be used. Risk neutral method, step 1, find FP1 and FP2. Then value of call option with FP1 CD, FP2 CU. Binomial tree, that is diagram. Now option trading strategies, trader, buying and selling of call option and put option. Strip and strap, that is strip, 1 call plus 2 put, question number 30. In the case of bearish market, strip is used. In the case of bullish market, strap will be used. Strap, that is 2 call. In the case of strip, 1 call 2 put. In case of strap, 2 call 1 put. Hedging. Now this one was for interest rate cap and collar. First, now let us discuss about the question that is being asked so far. From this chapter 10. Type of question that is being asked from chapter 10. Derivatives. Now derivative. December 16, hedging with future. Question based on hedging that has been asked in December 2016. And that hedging is long hedge and short hedge. जो question आपको June 2018 का we had discussed in the class, that based on that question itself. In the case of hedging, please practice that question. So many times that type of question has been asked from hedging. Another question, computation of theoretical price, computation of profit on option, that is net payoff on option. जो आप निकालते हैं intrinsic value minus premium value less करके, that is profit on option. Next one, June 2017. Computation of theoretical price. Again, theoretical price. Decision making. That is when actual future price and theoretical price based on illustration 4. So theoretical question based on illustration 4. Next question for swap, that is based on illustration 48. Illustration 48 is what? Based on diagram. Make the diagram, find the banker charge, and gain by both parties that we have to find. Illustration 48. Computation of net payoff, again in option, illustration 24, based on illustration 24. So computation of payoff under option in both cases. In December 2016 also and June 2017 also. Theoretical price and profit on option. Now June 2019, that is again course of action taken for option. That what will be the in money out money situation for the option. Swap question number illustration 43 based on illustration 43. 60-40 का जो रेशियो दिया है क्वेश्चन में, that type of question, computation of effective rate for both parties in swap deal when banker charge is given, that is illustration 43. From this, profit on option, theoretical price. Now December 2018, computation of theoretical price and decision making, course of action under option. So this question is being asked so many times. June 2018, put call parity. One question is based on put call parity. Please refer this question, question number 3A. Question is however very easy, but practice this question from the suggested answer because this is somewhat different. Somewhat different in the sense it is easy, but we have to find the values. We have to use the put call parity equation and we have to find some value from based on put call parity equation. Such question is not in the direct question is not in the book. That's why I have written here. Please solve that question. Next one, swap question based on 43 question, that is swap deal. Hedging with futures, long position, short position. This question we have done. Long hedge. Option pricing delta method has been asked here in June 2018. In money out money situation for option in June 2018, in money out money situation for option. Almost this question is in every attempt. December 2000, all the attempts, this question based on option. So in the case of chapter 10, please focus on swap, hedging with futures, option, in money out money situation, and method, computation of theoretical price, all the cases. Mostly dividend receivable, dividend not receivable. And one more topic, that is decision making. Any doubt? Now let us, if there is no doubt, then we will revise chapter 11. Chapter 11. Financial risk management, that is forex. Indirect quote. Indirect quote, what is indirect quote? When it is expressed in terms of foreign currency, that is 1 rupee, 1 unit of home currency. When quotation is given in 1 unit of home currency, that is 1 rupee is equal to how many dollars? That is indirect quote. Direct quote, 1 unit of foreign currency. American quote, that is 1 rupee is equal to that amount of dollar in 1 unit of any currency. What will be the dollar value in 1 unit of any currency? Suppose 1 rupee is equal to this much dollar. It is expressed in American quote. European quote, amount of any currency in $1. Suppose $1 is equal to rupees 70. That is European quote. Interest rate arbitrage. In this chapter, one is interest rate arbitrage, covered interest rate arbitrage. That in covered interest rate arbitrage, investor uses forward contract to hedge the exchange rate risk. That means we convert the currency into another currency and invest it in other country. Now, in first step will be, we have to find the arbitrage opportunity. In the case of interest rate arbitrage, question will be asked to find whether there will be arbitraging or not. So easiest method is to find the left hand side and right hand side. If both left hand side and right hand side are not equal, it means there will be arbitraging. If these equations are equal, there will be no arbitraging. So what is the equation? Forward rate divided by spot is equal to 1 plus home currency interest rate, 1 plus foreign currency interest rate. Forward upon spot, numerator में home currency, denominator foreign currency. Now profit on arbitrage. Question is, question December 2017, profit on arbitrage. So first step, question says, find out whether arbitraging will be done or not. So we have computed left hand side and right hand side of this equation. This one is not equal. There will be arbitraging. Now how to find arbitrage? Step 1, find where interest rate is lower. आ रहा है समझ रिवीजन आपने पढ़ लिया होगा, दैट्स व्हाई आई एम टेकिंग दिस वन फास्टर. रिवीजन फास्ट करा रही हूँ, अदरवाइज इट विल बी बोरिंग. You have already read all these things, just we are revising for your quick revision. Now step 1, what we will do here, find where interest rate is lower. Find the country where interest rate is lower. We will borrow from that country. So if we are borrowing, find amount payable after the maturity period along with interest, that is amount borrowed plus interest. Amount borrowed plus interest. Now investment will be made where? First we are borrowing, then investing. Investment where interest rate is higher. Now in the case of investment, interest will be received. So amount invested plus interest. Amount invested plus interest. Now investment will be made, suppose investment is made in India, then we will convert the dollar. If I have dollar, then I will convert the dollar into Indian rupee. So this one will be converted. This one will be converted first, and then investment will be made and interest will be calculated. This is step 2. Next step, first step, this is in dollar, this is in rupees, so we have to equate these two. एक step में आपने dollar निकाला था, borrowing in dollar and investment in rupee, because these are made in two different countries. So now convert this one in foreign currency. This one will convert the above amount at forward rate. Conversion will be made. In question it is given $1 is equal to this much. So dollar value will be computed. ये हम forward rate क्यों लेंगे? क्योंकि यहाँ पर हम 3 महीने या 6 महीने का जो टाइम है उसके बाद की बात कर रहे हैं. So we will take the forward rate, find the after the conversion it will be $1045. Arbitrage gain will be cash inflow minus outflow. That is, cash inflow is this one, outflow is borrowing. So in overall summary, we can say in the case of interest rate arbitrage, very popular question, this type, and very short question also. Interest rate swap difference from floating. Yes, if the difference is minus 0.5, then make the third step. First step आपने निकाला होगा fixed minus difference in fixed rate. Second step डिफरेंस इन फ्लोटिंग रेट. तो डिफरेंस इन फ्लोटिंग रेट अगर आपका माइनस में है तो नेक्स्ट स्टेप डिफरेंस इन फिक्स्ड माइनस फ्लोट, जो आप फिक्स्ड का डिफरेंस एंड फ्लोटिंग का डिफरेंस, तो वो अल्टीमेटली ऐड हो जाएगा. ये जो है आपका क्वेश्चन स्वैप ये स्टेप फिक्स, डिफरेंस इन फिक्स, डिफरेंस इन फ्लोटिंग. इफ डिफरेंस इन फ्लोटिंग इज -0.05, तो अब ये डिफरेंस जो आप नेक्स्ट लेंगे, तो दिस डिफरेंस माइनस 0.5, अल्टीमेटली इट विल बी एडेड हियर. फिर उसमें से बैंकर चार्ज डिडक्ट किया होगा. हाँ, डिफरेंस रेट इतना है. एनी डाउट? इला कुछ डाउट है तो प्लीज आप उसमें बताएं. ये डिफरेंस माइनस में आएगा, सो डोंट इग्नोर द माइनस साइन. वी विल कंसीडर द as in answer it is given plus 0.5. Answer where in suggested December in suggested point zero plus point. आप इसी बेस पे करें क्वेश्चन को. जो माइनस आपका आ रहा है, minus we have computed -0.5 and answer is +0.5. difference from floating. तो अपने डिफरेंस जो पॉइंट हमने लिया था, जैसे फिक्स्ड का जिसमें से डिडक्ट किया था, फ्लोटिंग भी सेम में से डिडक्ट किया है, सेम वैल्यू में से ही डिडक्ट किया है, तब ये आ रहा है माइनस में. क्योंकि वो इसमें हमें थोड़ा केयरफुल रहना है कि इसमें चेंज नहीं होना चाहिए. क्वेश्चन आप मुझे दिखा देंगे दिसंबर 2017. एक बार आप ट्राई करना इस जो इस बेस पे. अगर कोई डाउट आता है तो आप मुझे क्वेश्चन दिखा दे, और अदरवाइज अभी लास्ट में हम लोग देख लेंगे दिसंबर 2017 क्वेश्चन. अभी लास्ट में हम लोग देख लेते हैं क्वेश्चन को. ओके, अगर फिर भी नहीं मैच हो रहा तो मैं इस क्वेश्चन आपको एक बार देख लूंगी. अभी लास्ट में देख लेते हैं क्वेश्चंस. और send me text me that question December 2017. I will check that question. स्वैप डील क्वेश्चन बहुत इजी होता है स्वैप का, अगर आपको ये पॉइंट याद रहे तो. एंड स्वैप के क्वेश्चंस आप ट्राई करेंगे. स्वैप, डोंट लीव द टॉपिक. स्वैप इजी है. स्वैप, स्वैप ऑप्शंस अभी देख लेते हैं. इला हम लोग क्वेश्चंस इस टॉपिक को कंटिन्यू कर लेते हैं. पहले इंटरेस्ट रेट आर्बिट्रेज. आर्बिट्रेज अपॉर्चुनिटी, फर्स्ट बोरोइंग, देन interest rate, investment when interest rate is where interest rate is higher, convert that currency at, means convert the home currency to foreign currency at forward rate, then find the gain, that is investment amount received from the investment minus borrowing amount. So one topic will be interest rate arbitrage. Another topic in this chapter is annualized appreciation or depreciation. Now annualized appreciation and depreciation in home currency, forward minus spot upon spot into 100 into 365 or 12 or whatever, if it is given in days then 365, otherwise 12. Forward minus spot upon spot. Annualized appreciation or depreciation for foreign currency, that is spot minus forward upon forward. Forward minus spot, ये जो सेकंड फिगर होगा आपका वही आपको यहाँ पे डिनोमिनेटर में यूज करें. And in this case spot minus forward upon forward. Now bid and ask, that is bid rate, buying rate. Bid rate at which dealer will buy the currency, ask at which dealer will sell the currency. Two-way code, cross rate, determination of cross rate. We have done one question. Now money market operation, that is foreign currency payable and receivable. Foreign currency payable, amount invested. Foreign currency payable, basically three steps in foreign currency payable. Foreign currency payable means we have to pay foreign currency after certain period of time. So step 1, find the amount invested. To hedge the foreign currency payable, opposite action will be taken, that is investment in foreign currency. Step 1, find amount invested. How to find this one? Foreign currency payable divided by, if this one is investment, so take forex deposit rate, and don't forget to take the forex deposit rate for this period only. Suppose आपको forex deposit rate 9% per annum दिया है and foreign currency payable 3 months का ही है, so be careful to find interest rate, convert 9% for 3 month, 9% 12 month के लिए, तो 3 months के लिए कितना होगा? So take that deposit rate for that period only. Amount invested, foreign currency payable divided by 1 plus forex deposit rate. Next one, find the amount borrowed, that is foreign currency payable divided by 1, ये सेम स्टेप है आपका, इस स्टेप 1 में जो हमने निकाला है, that is foreign currency payable, और we can merge these two steps, इसको merge करके आप ये स्टेप लेंगे. This amount borrowed is equal to foreign currency payable 1 plus forex deposit rate, or whatever we have computed in step 1, multiply with spot ask rate. Now why ask rate? Multiply spot ask rate. I have written here, उसका explanation भी लिख दिया है, as hedger is buying the foreign currency. Hedger is buying the foreign currency, so ask rate will be taken because the dealer is selling the currency. So step 1 step, find this value, amount borrowed, then amount payable on maturity. That is, if we have borrowed the currency, amount will be payable on maturity along with interest. So amount borrowed plus interest, और interest भी आपका, इसको आप डायरेक्ट ऐसे निकाल सकते हैं, amount borrowed multiplied with 1 plus interest on borrowing for that period only. If it is borrowed for 3 months, interest will be taken for 3 months. और आप इसको सिंपल कंप्यूटेशन भी निकाल सकते हैं, अमाउंट बोरोड प्लस उस पे जितना भी इंटरेस्ट कैलकुलेट करेंगे. So this is amount payable on maturity along with interest. So basically 2 steps आप इसमें याद रखें. In foreign currency payable, what is the amount borrowed? Amount borrowed, foreign currency payable, 1 plus forex deposit rate into spot ask rate. Second step, this amount borrowed plus interest on this one. Now interest will be on borrowing. Here deposit will be for forex rate. This one will be interest on borrowing. So step 2. Now for foreign currency receivable, opposite of this one will be taken for foreign currency receivable. That is amount borrowed, foreign currency receivable, सेम फॉर्मूला अब इसी के नोट्स में आप अपने इसी के साइड में लिख लेंगे. फॉर फॉरेन करेंसी रिसीवेबल, दैट इज फॉरेन करेंसी रिसीवेबल डिवाइडेड बाय 1 प्लस फॉरेक्स बोरोइंग रेट, दैट इज फॉरेन करेंसी रिसीवेबल 1 प्लस फॉरेक्स बोरोइंग रेट. सो स्टेप 1 इज सेम एज दिस वन. यहाँ पर स्पॉट आस्क रेट लिया है. इन द फॉरेन करेंसी रिसीवेबल वी विल टेक द बिड रेट. So step 1 for foreign currency, this is payable. For receivable, receivable means what? We have to receive after certain period of time. So for receivable, foreign currency receivable divided by 1 plus forex, that is borrowing rate, into spot bid rate. And next step will be amount received on maturity. Next step, amount on maturity, amount of investment plus amount interest on deposit, that is amount invested plus interest on deposit, that is interest received on amount of investment. So this is just opposite of this one, foreign currency payable. In this chapter, foreign forex, 2 types of questions are there. One is related to money market hedging, December 2016, 16, 17, 18, 19. 16, hedging, illustration 11. Hedging, that is money market hedge. Illustration आपका 11 जो है दैट इज मनी मार्केट हेजिंग है, उसमें कॉल ऑप्शन है, फॉरवर्ड है. Illustration 11, that question has been asked. June 2017, money market hedging, that is illustration 6th. That question has been asked. Money market hedge, foreign currency receivable and payable, that is the question from most important topic from this chapter. Money market hedge, this topic, foreign currency payable and foreign currency receivable, it has been asked so many times. December 2000, again illustration 11. June 2017, money market hedge, illustration 6th. June 2019, money market hedge, illustration 6th. Based on this one. Then forward rate, annualized rate, illustration 4. That is computation of annualized rate. Now June 2018, illustration 4 has been asked, and decision with forward rate payment. Practice this question. This one is somewhat different. However, this is easy. ये easy है question, but बुक में इस टाइप का फॉरवर्ड रेट पेमेंट से आपको फॉरवर्ड रेट से पार्ट ऑफ दिस इज जस्ट द पार्ट ऑफ इलस्ट्रेशन 11. उसमें फॉरवर्ड रेट है, ऑप्शन है एंड मनी मार्केट है. सो part question of illustration 11 has been asked in June 2018 also. So for the hedging in the forex, must revise money market hedge. And important question, illustration 11, 6th, 4th, these are the must to do list. Illustration 6th, 4th, 11, illustration 8 also. Questions based on illustration 8. So illustration 8, 11, 6th, 4th. Money market has annualized appreciation depreciation. That is this formula. और एक और टॉपिक है इसमें, दैट इज कंप्यूटेशन ऑफ नेट प्रेजेंट वैल्यू. इलस्ट्रेशन 13, 14, 15. Illustration 13, 14, 15. So these are the questions generally asked for. Overall, we can say, while revising derivative, must revise foreign currency payable, foreign currency receivable, means focus on these topic, highlighted topic, foreign currency payable, receivable, and annualized appreciation, depreciation, decision making, interest rate arbitrage, and in this chapter 10, that is swap option simple case, that is computation of profit on option, and computation of theoretical price, mostly when dividend is given. Computation of theoretical price. So far for hedging question, June 2018 question that has been asked from the December 2016 से ही वो question, most of the time it has been repeated. So that question for hedging, these are the topic, highlighted topic, and decision making, theoretical price, decision making. Now revise the syllabus. फिर ऑब्जेक्टिव क्वेश्चंस होगा इसमें, तो थोड़ा प्रैक्टिस करें इसको, अभी तो टाइम है. होप इट विल हेल्प यू टू रिवाइज. स्लाइड में आपके समराइज कर दिया है, आपको रिवीजन में हेल्प करेगा. एंड एनी डाउट, एनी क्वेश्चन, एनी डाउट, इफ यू हैव एनी डाउट इन एनी क्वेश्चन, आप मुझसे बाद में भी पूछ लेंगे, कोई दिक्कत नहीं है. आप मुझे टेक्स्ट कर दें, आई विल solve that question. I will give you the hint for that question. Any question you want to ask? कुछ पूछना है question? कुछ topic revise करना है? Anything else? Or should I wind up? अब इसको, any question? If you have any question, then please let me know. Interest rate cap and collar, question number 53. Revise कर लेंगे. However, question interest rate cap collar. अभी तक तो देखा नहीं मैंने एग्जाम में। hedging which question? Hedging long hedge or short hedge, that question, Priyanka. Which question? Hedging long hedge and short hedge, are you asking about that one? Long hedge and short hedge. In this is the question, long hedge and short hedge. In the also the question is given at the end. Question is maybe in this case in objective mode, suppose only this point is given. Till this point question might be given. I will revise. Let me revise this one. This question. Question says this is the company imports crude oil. In short, we are doing this question. Bharat Oil Company imports this crude oil on regular basis. Requirement is 100 ton per month. There has been surge and the company is expecting that the price will increase. Current price is 5,500 per barrel, but the firm expects that the price will rise by 5,800 in August month. Now the company wants to hedge against rise in price. The future contract, the contract size is 100 and future contract in August, the price is 5,668. Now the company wants to hedge. This point has been added in this question, that company wants to hedge half of its exposure in future and another half will be bought from the open market. First half will be hedged with the help of future. One half will be hedged with the future. So what is the number of future contract? First point is, what is the number of future contract required to hedge? Now we have step 1 is find the number of future contracts. Suppose the question is only till this point. What is the number of future contract? Now the requirement is only half hedged. All the requirement is not hedged, only half of the requirement is hedged by the company. So first we have to find what is the requirement. How to find the requirement? Find the quantity to be hedged. Requirement is 100 ton per month. Question says requirement is 100 ton per month. 100 ton per month. 1 ton is equal to 7.33 barrel. 1 ton is 7.33 barrel. So 1 ton will be this much. 100 ton is 733 barrel, means company requires 733 barrel in 1 month. But half of it will be hedged. It means 733 divided by 2. 366.5 barrel will be hedged. And question says to round it off. So 366.5 barrel, one future contract size is 100 barrel. For 366.5 barrel, the company requires to hedge 366.5 barrel and contract size is 100 barrels. So for 366.5 barrel, how many future contracts will be bought? 3.665 future contract. And question says to round it off to next figure. It is written in the question, number of future contracts should be rounded off to next higher integer. So it is 3.6 more than 5. So it will be rounded off to next figure 4. So 4 barrel is required. How to find this one? Find the requirement 100 ton per month and 100 ton 1 barrel is equal to 1 ton is equal to 7.33 barrel. So 100 ton 733 barrel. Half of this will be hedged, means 366.5 barrels will be hedged through future contract. One future contract, in one future contract we have to buy 100 barrels. So for 366.5 barrel we need 3.665 future contract. And question says to round it off, so 4 future barrel. Now next part of this question. How many future contracts? Now next one is find the effective price per barrel. What is the effective price per barrel? Step 2, find the effective price per barrel. How to find this one? The spot rate is, in this case, two cases are given. When spot rate is 5570 and future price is, future contract rate is this one. So spot rate is this, future contract is this. Hedged part for future contract, because for future contract we are hedging only 400 barrels, means this 3 rounded off to 400. So 400 barrels we are hedging. What is the effective price? In the case of long hedge, cost of buying, that is cost of buying minus gain on sale. In the case of long hedge, this formula is used. Cost of buying, effective cost of buying is cost of buying at spot rate minus gain. आपका कोई सामान आप खरीदते हैं तो इफेक्टिव कॉस्ट ऑफ बाइंग क्या होगा? जो जितने पे आपने उसको खरीदा, दैट इज कॉस्ट ऑफ बाइंग, माइनस अगर कुछ गेन होता है तो गेन बाइंग प्राइस में से डिडक्ट कर देंगे. सो कॉस्ट ऑफ बाइंग माइनस गेन ऑन सेल. नाउ व्हाट इज द कॉस्ट ऑफ बाइंग एट स्पॉट रेट? Cost of buying at spot rate, 400 barrels we are buying. Spot rate is 5570. This is the spot rate. This is the spot rate. And gain on sale. How to find gain on sale? Gain on sale will be difference in future contract price. That is, अगस्त में आपने फ्यूचर कॉन्ट्रैक्ट प्राइस आपका 5668 था और अभी फ्यूचर कॉन्ट्रैक्ट प्राइस है 5788. So difference is the gain. This is the gain. So this one will be deducted from this one. 22, 28 minus 48. 2180 will be the effective price. Now effective price per barrel will be 5450. This is the computation of effective price per barrel. Now for exposed price. Another question says effective price for the exposed part. Only 400 barrels are hedged. The rest 333 barrels are exposed, means these will be bought at the market price. So effective price of 400 barrel is this one. We have computed in step 1. Effective price for 333 barrels, it is bought at spot rate. इसको आपने spot market rate पे खरीदा है. So this is the price. Total this plus this. Total will be this one. Effective price will be total this divided by 733. So this is total price when 330 barrels are exposed, means 330 barrels are bought at spot price, and this is the price when it is hedged. तो ये है long hedge, that is cost of buying, effective cost of buying, that is cost of buying at spot rate minus gain on sale. Short hedge में हमने पढ़ा था cost of selling, that is cost of selling, उसमें प्लस जो आपका लॉस है, लॉस उसमें कंसीडर किया था. हियर इन द केस वी हैव डिडक्टेड द गेन. दिस क्वेश्चन इज बेस्ड ऑन लॉन्ग हेज. दिसंबर 2016, आई थिंक दैट इज बेस्ड ऑन शॉर्ट हेज पे. फॉर्मूला आप इफेक्टिव प्राइस में ये यूज करेंगे फॉर लॉन्ग हेज. शॉर्ट हेज में कॉस्ट ऑफ सेलिंग होगा, इफेक्टिव कॉस्ट ऑफ सेलिंग होगा. प्रियंका, क्वेश्चन, एनी डाउट? Yes, sure. Please ask in the group if any doubt. मोहन, आप कोई भी, अगर किसी को भी कोई भी प्रॉब्लम हो तो आप ग्रुप पे आप टेक्स्ट कर देंगे, अदरवाइज मुझे पर्सनली भी आप टेक्स्ट कर सकते, कोई प्रॉब्लम नहीं है. आई एम ऑलवेज देयर टू हेल्प यू. सो प्लीज आस्क द क्वेश्चन व्हेनेवर यू हैव एनी डाउट. मे बी इमीडिएटली आपको रिप्लाई ना कर सकूं मैं, आप फिर से मैसेज कर दे, कोई प्रॉब्लम नहीं है, आप पूछ ले क्वेश्चन. जब भी आपको डाउट है आप क्वेश्चन पूछ ले. किसी भी क्वेश्चन, जस्ट लेट मी नो द क्वेश्चन नंबर ओनली, बिकॉज आई ऑलरेडी हैव द बुक एंड स्कैनर. Suggested answers I have the book. So only text me the question number or page number. I will refer that one. Now revise the topic, revise the syllabus, and prepare well. And I'm very thankful to you all. इतनी जल्दी, इतनी आसानी से syllabus cover हो गया. timely syllabus I have covered with your help. आपने इतना cooperate किया, help किया. Thank you. I'm very thankful to you. My sincere thanks to all of you and best wishes for your exam. Thank you very much to everyone and wish you all the best for your exam. And once again, if you have any doubt, please ask the question in the group, or you can text the question personally to me also. Any doubt? Any doubt in any question, or should I wind up? Thank you, Chetan. Thank you, everyone. Thank you. Thank you, everyone. Thank you so much. I will send the theory of portfolio. I will send the theory of portfolio in the group. Please make the short notes of the formula for portfolio and derivatives. आप 1 से 2 पेज में derivatives के short notes बनाकर revise करेंगे. So please revise, and once again thank you very much. Thank you and bye.